Hi there traders, this is FxExplained. This is another Master Academy with Steve Miley. So hi everyone, in today's Master Academy we're going to take a look at an introduction, a very basic level introduction to technical analysis. We've already looked at fundamental versus technical analysis and kind of differences between them, and this is a very first step of an introduction to technical analysis. We're going to have further videos with more detailed exploration of technical analysis, but this is our first step, a very beginners level introduction to technical analysis. So we're going to look at, in this slideshow and report, an introduction to technical analysis. What is technical analysis? Different types of chart types, and then to look at different time frames. So first of all, what is technical analysis? We're going to look here at the principles of technical analysis. What are the main principles of technical analysis? Well, technical analysis is the use of charts to make trading and investing decisions. It's using the charts only. Technical analysts are also called chartists. It's also the use of charts to make these trading and investing decisions based upon the principles of technical analysis. So what are these principles? Well, first of all, the first principle is the price discounts everything. Everything that we know about the market or could know about the market, any kind of probabilities of what could happen to the price of a market, is already discounted immediately into the current price. The second principle of technical analysis is that price moves in trends. Trends are formed. This comes from Dow theory. Trends are formed, and those trends can either be up, down or sideways trends, and we're trying to take advantage of those trends by buying in uptrends and selling in downtrends. And then the third principle of technical analysis is that history repeats itself. History repeats itself. Human nature and psychology means that influences from human emotions, human thoughts and human behaviors influence markets, and those are constant over time. So now we're going to take a little look at different chart types for technical analysis. So we're going to look at line charts. These are the most basic type of charts, and they represent just a line that formed between different prices on different days or different hours or different weeks maybe. Usually it is the closing price that we see. So a line chart is usually based around the closing price. So it's a series of dots and the lines link the dots. And here we have the daily euro versus dollar EUR USD chart, and these are just the closing prices, so a line linking the closing prices over time. The next chart type we're going to look at is the open high low close chart, the OHLC, also known as the bar chart. So this is a vertical line which represents the high and low for the trading period. And then we have a close and the open indicated by a small dash, a small horizontal line to the left of the vertical line, and for the close a small dash to the right of the vertical line. So here we have that in graphical form. You can see the vertical line represents the high and low. If this was a one-day bar chart or a one-day open high low close chart, the high would be the high of the day, the low would be the low of the day, the dash to the left of the vertical line, the horizontal line to the left would be the open, and to the right would be the close. And here we have an example of a daily EUR USD bar chart or OHLC open high low close chart. We're now going to look at candlesticks charts. So this is how a candlestick is formed. We have the what's called the real body, which is the coloured in area here on white and black, and that is the distance between the open and the close. And it's bullish obviously when we have the open below the close, and bearish when the open is above the close. And then the extremes of the vertical line at the top and the bottom you can see poking out are the highs and lows. So the candlestick chart is similar to the bar chart, but it differs in the way that it is visually constructed, as we've looked at. The candlestick is the formation of a wide bar on the vertical line, which illustrates the difference between the open and the close. So we looked at that there. And this is called the real body, the body or the real body of the candlestick chart. And then above and below that real body, we have the what we call the shadows. Now, if the real body is shaded in often black or sometimes red in today's markets, then that shows that the open is higher than the close. The close is lower than the open. It's a downward day, and that would be a negative candlestick usually. If the close is higher than the open, the body is usually clear or white or green. The thin lines, the small lines above and below the real body, are called the shadows, as I just mentioned there. And they're also called the candlestick shadows, the upper shadow, the wick, and the lower shadow, the tail. The peak of the upper shadow is the high of the period, so maybe the high of the day, and the bottom of the lower shadow is the low of the period, possibly the low of the day, or the low of the hour, or maybe the low of the minute. And here we have an example of a daily EUR/USD chart, the same chart again, but this time represented as a candlestick chart. We're going to briefly now look at some other chart types that are out there as well. So we have the point and figure chart displayed here. We could have a market profile chart, a series of letters, as you can see here. And there's the Heikin-Ashi chart, as we see here. The final thing we'll look at with our introduction to technical analysis is time frames. Time frames should be appropriate to the trader's trading horizon. So what does that mean? Well, for a longer term time frame, we would have a longer term trading horizon. Here, for a swing or position trade on the daily EUR/USD again, we would maybe looking at 1 to 2 week outlook, and we'd look at a daily chart. We'd have a longer term chart, a daily chart, looking back here multiple weeks and months for maybe having an outlook of maybe a few weeks forward on a swing trade or a position trade. However, if we had a shorter time trading or horizon, we would then have a shorter chart time frame. So here, if we were day trading maybe looking to hold a trade for the next 8 to 12 to 24 hours, we would then maybe only look at a 1 hour chart to make our informed trading decisions. And here we have an example of a 1 hour EUR/USD chart that maybe a day trader would look at. So that is the end of our introduction to technical analysis on this Master Academy. We've looked at what technical analysis is with regards to the principles of technical analysis. We've looked at different chart types, and we've looked at what time frames we could maybe use. That's all for today's Master Academy. Join us again. If you have any questions about this article or this video, please leave a comment below and I'll come back to you.